Years ago, one of my mentors told me that use the 4-hour time frame to find key major levels for your entries, then zoom down to the 1-hour time frame to narrow those levels smaller and more precise, then getting on the 15-minute and the 5-minute time frame to find your exact entries, maximize your risk to reward, and take your place. Now that blueprint gave me a way to find my day trades and have a day trading mechanism that works pretty much every day and I still use to this day. In today's video, I'm going to be going over how do I find my entries, how do I find my exact spots to get in, and how do I start from those major time frames and slowly narrow it down until I find my exact entries. If you like to learn more about stock market, crypto markets, and anything about finance, make sure you subscribe below, hit the like button, hit the comment button. Well, let's get in and let's talk about how to find from larger time frames, moving it and narrowing all the way down. If you're not familiar with the stock market, it revolves around multiple different time frames, and using a combination of different ones can find you really nice setups and really nice entry. For me, I like to day trade. There's a lot of people that trade in 1 minute and 3 minute, really small time frames. For me, I like to kind of look at the bigger picture and find trades that I might be holding for longer than a couple minutes. Usually my typical trade setup lasts between 15 minutes up to a few hours, sometimes even a couple days. But I don't really get in, get out really quick. I think it's very stressful to trade. I know people that do that and do that successfully, so if that is your cup of tea, do whatever you gotta do. We're all different, but I'd like to trade a little bit less stress-free. I like to take further out expiration contracts, and I like to kind of just chill and let my trades play out and give it time to catch the bulk of the move. So we're gonna jump into the charts. I'm gonna show you guys first how do I start on those larger time frames and slowly narrow it down. So here we have it, guys. This is the S&P 500 on a 4-hour time frame. A lot of times I start on 2 different time frames. That's gonna be the 4-hour time frame or the daily time frame, and a lot of times mostly it's gonna be a combination with those. Let me start on the daily and then move down to the 4 hours to narrow those down. So I first start off with one of the main keys. You see my screen is all price action, especially when you're drawing out your zones, guys. Turn off any indicators. I don't like to look at indicators. I like to draw my zone, draw my supply and demand areas, draw my support resistance area, completely free of any outside influence, and just draw them out. If you do use indicators, I recommend start off with taking them off and then add them after you draw your zone. So on the daily, I'm going to look for those major levels. I'm going to pick a trend line. You can use your supply or demand or support resistance. I like to kind of stick to support resistance most often than not. I like to look for major areas like this. What do you see? Why did I choose this area? You might be asking. You might see they touch 1, 2, 3, 4, 5, 6, 7, 8 times. So 8 different times this area got a reaction. Hits this area, runs up. Hits this area twice and runs up twice. Finally, bounces and then goes through, rejects after first try, rejects small or second try, goes through it, but then ends up going right through it, rejects another time. So you can see that every time this price reached this certain area, he has gotten a reaction out of the certain asset, a certain stock, wherever you're trading. So you mark that down as a major area of resistance or support, depending on where you're looking at it from. So let's start this out again, and let's see where I would draw a secondary support or resistance level, something closer to maybe where we're trading at currently. I will look at this low here and look at how it touched a couple times as well, very similar to the one right above it, another level of support slash resistance. As you guys can see here, bounce, moved up. Here, move down, here, hit this kind of zone between these two, and then move down, here again, give a resistance, hit a resistance, hit resistance, hit resistance, and then currently you hit resistance one more time. So you can see this is the main 2 levels of support, and now resistance or resistance out towards support. Even here, once you dig it above it, you guys can see this secondary level here bounced and get those reactions out of the stock by pushing it higher. Those are going to be 2 key levels that we're using for this example. And as you guys can see, price is probably approaching this somewhat soon, and those are going to be the levels that I'm going to be watching to potentially take a little short position or look for a breakout on the long side. You guys had this, if you had this level drawn out previously, you could have seen here, you hit this level and then you move down. They could have given a nice little entry for a short position. A short position that we actually did take advantage of in our Discord group, and I learned it as SPY puts. Zoom this in and look at the 4-hour time frame. What is the 4-hour time frame? Now we're just gonna kind of As you can see, the daily can be a little difficult to draw on, so with this level, you're going to adjust a little bit more. For example, let's zoom in on those 4 hours, and you want to adjust it right where you think it's the most accurate level. Looking through all this, you're kind of going to scan through, maybe you adjust a little bit lower, a little bit higher. You're looking for just to get more precise so that when you get to your execution, you're getting the best possible entry. So at the end of the day, guys, it's all about execution and finding the best entry to make money on. Also keep account if you don't have pre-market or after hours on, make sure you turn those on. I think those levels are always going to be a key level to watch, regardless of what happens. So you can see it's going to be right around this 408.9, print making a 409 resistance area right over there. Right over here, 49.08 roughly. Zoom in a little more and look at the hourly as we're trying to get the most precise that we can. Currently we're looking for this level and you try to make it as accurate as possible. You can see this peak here hit, this here, this here. I would like to probably make this a tad bit higher, and that's again why you're messing through different time zones. I think this is going to be this low here from this February 24 candle. It's going to be the major pretty much key, as you guys can see, hit multiple times, and those are going to be your two key areas. As you guys can see here, you did go slightly above it, but right at the pre-market open, and then you rejected from it. Now we're in hourly, we're going to zoom in and look for that 15-minute time frame to get really precise. Right here, probably move this up to right around 409, right there, 409.01, and that's how I would have level drawn out right here. So I have this 409.1, as you guys can see here, was pour multiple times on the 15-minute resistance, and you're trying to kind of scan through this level, and you're working this out in the pre-market hours, in the post-market hours, whenever you have time to find these exact levels to then take trades during the market hours, and I'll use your market hours for this. And as you can see from here, you did shoot above it, but this was during the pre-market, so you couldn't really have traded it. You guys can see this, it was holding a support, and then you bounced on it in the pre-market hours. During the market hours, you sold off right under it, and then guess what it could have been if you had this run out. This could be a nice little re-entry for a short position, right? You could have had a nice short position here, move it down, and then eventually, in the market, the day after, this moved down again, and guess what happened? Today, or yesterday, so the market is closed, you ran back up, and you find resistance, guess where? Look at all these wicks, all these doji levels. You find resistance at this major level that we see. You want your levels to show, when you're in a small time frame, like 50 minutes, I showed you guys on the hourly and the daily how you saw price reacting on a level, and guess what we're doing again? We're again reacting to this level, right? You hit this level, you bounce support, right? You hit it here, resistance, bounce down. You're hitting it here, potential resistance or potential we could be breaking out. We'll stop to see, but at least you're getting a reaction. When the stock doesn't give you a reaction, that's how you know if your level is good or not. So let's imagine you had a level right here that somehow you think, okay, well, here's a level, we'll just draw it out across this way. You can see this level is not respected at all. You can see this candle just cuts through it with no hesitation. These candles cut through it. Here, it cuts through here, just goes straight up. You have a level that's not being respected whatsoever. You know a level is good when either you get a reaction like we're seeing here, this bounces a reaction, or at the very least you're getting a fight. A fight means that bulls and bears are fighting, where potentially bears are adding to short positions, and bulls will be trying to break to that level to really push it to the new highs and show that market that the bulls are really strong in that situation. So that's what you're gonna see. You'll see these dojis at the very least. If you're seeing your levels just get cut through, like these big candles are just cutting through them, you're probably drawing your levels incorrectly, and you should be, refine those levels and see where you're making mistakes. And maybe you watch videos like this so you're learning. Now on the 5 minute, we're gonna zoom in on the kind of the last time frame. Some people like the 1 minute as well. You can do that if you wish, but most I stick to the 5 minute, so I don't get shaken out too much off the 1 minute time frames. So when I'm on this 5 minute time frame, this is going to be my exact levels. For example, this was actually a trade I took in a Discord chat room, and it was alerted, and I believe I also posted on Twitter for free for some people to, if they were able to catch that. I have this measure drawn out, and then I'm trading right, looking in the charts, and I have this level drawn across. I can see on these smaller time frames, price using as support, and now understanding that, like, hey, since we're below it, more than likely it's going to be a level that I should be taking as a resistance area. As I tell you guys all the time, waiting for that confirmation to be this candle right here will be the best way to trade this. So I would take a short position, and I will say, let's say, hey, we break below these lows here. Given it's a 5 minute, so it's going to be my exact entry. If we break below this 408.91 area, that will give me confirmation that we're just going to be a rejection. We're going to see lower. As you guys can tell, this candle breaks, so you would enter with a stop loss above this high if you want to be a little more risky, or above the latest candle high. If it'd be a little less risky. For me, more than likely, I would put it right below there with a profit target of right around this lows here. Would have been a first profit target, hoping for lower. Since it was kind of towards the end of the day, around this lows, towards the end of the day, you probably have to be a little bit quicker with the profits because the market was going to close quite soon. If you did hold that, say you took a couple of days out, expiration, you're able to hold that, as you can see, you paid much more. But we'll just use this first profit target as our example here. As you guys can see now, this risk reward is a 1 to 3 risk reward, and this is why I like to use these levels for resistance and support zones, so catch bounces and rejections versus breakout. Because if you're taking a breakout, right, your risk reward will not be as good because your stop loss will be much further. So let's say, for example, this price had broken out here. You take a long position. Let's say this is broken out. Your stop loss, you have to have at least here, like, at least below the latest low. So in this case, you could have it here, but realistically, to be extra safe, you would have to have it here. And then even if you have a nice move, your risk reward is barely like a 1 to 0.5, maybe a 1 to 2 if you get if you get a really strong breakouts. So I don't really like those, because when you're finding bounces and rejections, you're finding a 1 to 3, 1 to 4, 1 to 5 risk reward that, yes, maybe they do work a little less. Maybe you do get stopped out a little more often, but you can have a lower win rate, but if your risk reward is much higher, you make a lot of money that someone has a high win rate but has a 1-to-1 risk reward. Luckily for me, in the last few weeks, I've become a really good win rate and a really good risk reward, as proceeding with keeping track of all my trades. If you follow the $500 account, in less than 10 trading days, you would have had a little over $3,200 of profits, which is just remarkable. So if you want to get into our Discord group and learn how to trade with me live every single day, make sure you hit the link down below. If you want to get a free trial, make sure to DM me on Instagram. I'll give you a 5-day free trial. But this is all for today, guys. I wanted to give you guys a breakdown on how, using price action solely, I go from those larger time frames, find my key levels, find my key spots. It's all about the key spots, guys. If a price is trading, let's say, in a range right here, this is not my key spot. I'm not taking a trade because the risk reward to me doesn't look good on either side. I need to find my key spots. That's why I trade less but profit more. If something is not hitting my key spots, I'm not trading it, guys. You don't have to force a trade every day. And if you're not using the pre-market, after hours, the days off, the Sundays, Saturdays to draw these key levels, guys, you're not gonna go far in your trading career. So make sure you draw your key levels, make sure you find the right spots, trade less, profit more, get in the Discord, and as always, peace.